because we'll have JRock's strategy translated to multiple languages. I apologize for the slight delay. Usually we try to start, 5 minutes early, but I was kind of stuck in traffic. So we're here, ready to rock and roll. We have the amazing JRock here. Now, Justin, are we recording yet?
Yes, sir.
Perfect. Okay, so you guys, Justin is a 20-year veteran trader. He started in stocks and then did options, and now he's done Forex for quite some time and thinks it's amazing, right? And so this 20-year veteran trader has now tried out the web analyzer for several weeks and absolutely loves it. In fact, he loves it so much that he's created a super amazing strategy that honestly, I'm pretty blown away by. Everybody we've showed it to so far to kind of test it out has been blown away by it. It's simple. If you know what a moving average is, you're going to get this really quick. If you don't know what it is, don't worry, because that's why we have JRock here to teach us, right? So JRock's going to be teaching you guys how to use the strategy. What is the JRock strategy? How can it benefit you, right? So with that being said, Justin, let's have you go ahead and teach everyone, buddy.
All right, I'll go ahead and mute you. Thank you so much for that introduction. And welcome to the call, everybody. I'll go ahead and start my video, and hopefully you can see me here. And then I'm going to share my screen right here. 1 second. All right. So let's go ahead and get right into it. So everybody should be able to see my screen, and I'm going to put the chat box up here so that I can see it also. And hopefully everybody can hear me. Can you all hear me clearly? All right, guys, welcome. I'm glad that you are all here on the call, and we do have it recorded, so it should be available to anybody else that will not be able to watch right now because they're at work, sleeping, or stuck in traffic. And what I'm going to do is take a little bit to share with you a strategy that I have been using for over 10 years. And as Steven said, I have been trading for 20 years. I started out as a young man, 19 years old, and started trading stocks and penny stocks mainly, because that was about all the money I had to invest and hope that one day I could get rich. Well, little did I know how powerful the Forex market was, and I was introduced to it probably about 12 years ago, but I told them, nah, bro, I'm good, because I didn't want to learn something new. Little did I know how easy it would be to pick up, because it's actually the same as trading stocks, only way better. It is stocks on steroids. And I tell you, you can take a little bit of money and you can turn it into a lot of money in a short period of time. But I do want to give a disclaimer. My results are not typical, and past performance does not guarantee future performance. You could lose all of your money in any investment arena. That is the potential. But nowhere have I seen the ability to take $50 or $100 and turn it into $10,000 or $50,000 than the Forex arena. Because trading stocks or options, you need to have $25,000 in account to become a pattern day trader, where you can scalp, flip, buy, sell in a matter of seconds. You need $25,000. With Forex, you only need $50, maybe even $10. I think some brokers allow you to start an account with $10. And friend, I have taken $10 to $500 and then to thousands of dollars. So it is very easy to do when you know what you're doing and you learn certain strategies. One of the things that I'm going to tell you is the learning to trade is like learning a new language. There is a learning curve that comes with it. So don't expect to get it all in the same week or month. You are going to have to dig in. You're going to have to read, watch videos, pay attention, get on live webinars, access IML Academy, and study, study, study. It depends on how much money you want to make, depends on what type of degree you want to get. For instance, if you're in college and you want to make more money, what do you have to do? You have to get a better degree. The doctors and lawyers, they go to school for 7 to 10 years. That's why they make more money than the average person. So in Forex, it's no different. What kind of degree do you want to earn? You want to earn a high school diploma? You want to earn a bachelor's? You want to earn a doctorate? It's totally up to you. The more you put into it, friend, the more you're going to get out of it. But I'm here to tell you that basically you could learn Forex and how to trade like a pro within 3 to 6 months. All you have to do is learn one simple strategy. One of the things that I teach everybody is this. Basic trading analysis are lines of support and resistance. Just like this, if I were to look at this chart and I say basic lines of support and resistance. So if I draw a line straight across like that, that is a line of support. If I'm going to let that go right there. And then take another one. And I'm going to do another line right here, a line of support or resistance, and draw it across. And you can almost see where levels are on basic support or resistance. So that's kind of what's called the building process, where you have floors and ceilings, and that is basic analysis. Whenever a stock breaks above the ceiling to the next floor above it, it will come down and retest that old resistance, and now it becomes new support. It goes up and hits another high, and it forms a new level of resistance. It will come down and almost retest or retest the support before going up, retesting the resistance, and then powering through it to make an entry to the next level called the next leg up, comes back down and retests the support that was old resistance. That is basic analysis. Now another analysis is trend analysis, where you have a channel, and when you get in certain channels, that is like this. So if I were to draw another line here, let's see if it'll give it to me right quick. Move that back over and then I'll show you. Let me grab another line and then grab that and drag that right here. So this is called a channel, when you can do diagonal lines like that, and you can play the peaks and the valleys, the highs and the lows, depending on how the channel is going. Those are lines of support and resistance, horizontal lines and diagonal lines, support and resistance. Those are called channel trend, and it is a part of basic analysis. Everybody should do it. Now, I don't necessarily have to do it anymore because I can just look at a chart and see exactly what's going on with my naked eye. It's being able to read and discern by just looking at a naked chart without any moving averages, without any indicators, and saying, you know what, that's going up or that's going down. I can see a trend right here. These are the highs, so I can almost anticipate. So the better you get with your eye to see the chart, the better you will become at making high profit trades, what we call high probability trades. And that's what you want to look for, where you don't have a large drawdown. So what we're looking at right now is the day chart, and I want to go to the monthly. Here's what I tell people. Anytime you get a signal, you want to analyze that pair starting from the highest time frame, the 1 month, and working yourself down to determine what the direction is going to be. And I'm sorry if I'm cutting in and out. It is the Zoom. That is the application, and it just happens. I am recording it to my laptop, and I will have that available after a while. Okay? So what I tell you, whenever you look at a chart, the first thing you want to do is analyze from the month time frame. Well, this is over the course of 10 years. I'm going to zoom in and pull this chart over, and I'm going to show you what we're looking at. This is Euro Canada, which came out, a signal came out, and we gave an entry based on what I was doing, saying that it was a potential sell for Euro Canada to go down. And we look at the monthly time frame. You see that we have a low here, a low here, a low here. These are called higher lows. The lows are coming up higher, and then you also have a high here and a high. That's a higher high. Then you have a lower high, but the wicks went all the way up here. That means the high of these months went way up and then came way back down. So that was selling pressure when you have long wicks at the top. If you have long wicks on the bottom, that's buying pressure pushing it up. And then we broke down, we still put in a higher low, and then we pushed up to the resistance level about this point right here, and then finally broke through, and we've run all the way up here. So let me zoom in over the next course of time for the next few months. And actually, this is over a 3-year period. So if you look right here, the wick at this point is the same level as the wick. So we were hitting what's called price level resistance. And I'm going to draw a line straight across here so that you can see what I'm talking about. And let's see if I can move this. Move the chart. And then I'm going to move that line right up here. And then from there, I'm going to introduce my indicators that I use that are very powerful, and they make money for people. So this is a price resistance level where it hit that ceiling, came down, and then it hit it again. It will not normally break through on the first retest. It will probably break through on the third or the fourth retest. But at that point, we can expect a pullback because it is in overbought territory. It has gone way up. So what you have to do is learn to read the charts based on price, level, support, and resistance, and then learn to use indicators. Now, some of the basic indicators that people use, you probably heard of them, MACD and stochastic. MACD is moving averages, convergence, divergence. That's basically what that means. Whenever the moving averages are converging or diverging, then the MACD will spread out or cross over, and that is when you look for an entry or an exit. With MACD, it tends to be a lagging indicator, which means you will generally be late to the party. With stochastics, it's the same thing. It will be a lagging indicator. With moving averages, that is what professionals use, and so you will get a better entry or a better jump on the pair from a buy or a sell standpoint. Let me go ahead, and I'm going to turn on the first moving average. And I need to move this over a little bit, but I will show you here in a minute. Actually, let me move this out of the way. And then I'm actually going to turn this one on right here, the TEMA 370. And don't know why it's not turning on, but that has happened before. Well, maybe it'll come on in a second. It's okay. I will turn this on, and let's see, turn on the red line. So the WMA 280 is the red line right here. This is called your last line of defense, the red moving average line. Now you may ask, what is a moving average? A moving average has numbers associated with it. You've heard of the 5 moving average, the 10, the 20, the 50, maybe the 100 or the 200. You've heard of many different moving averages. Well, the moving average is basically the number of candles that moving average represents divided by itself, and it gives you a number. So what does that mean? Well, if I have the 280, that is taking the last 280 candles, and it takes the closing price of those candles, divides by 280, and it puts a dot. And then the next candle forms, it takes away the first candle, and now you have another 280 candles, and it puts another dot. And then it connects those dots to form a line. Well, these lines provide major support or resistance for candles and for entry and exit. That is what moves the price. What causes pairs to go up besides news? Traders. Traders move the market. They look for lines of support and resistance, and the number one support and resistance that they use are called moving averages. When you learn to use these moving averages, friend, you will be ahead of the game. You will beat people to the entry and the exit if you know how to trade them. You will be way ahead of all the beginners, and that is what I'm here to do, is to teach you how to use them. You are not going to understand it all in one session. You have to watch the video over and over again, and it's on YouTube. I also have an accompanying text document that will help you, and if it's not on YouTube or Stephen hasn't made it available, it is also in my chat room that you can find me on Facebook, and I'll give you the chat room. Or ask some of the people in here, and they will tell you what the chat room is, and it's in the top of the chat room. But that text document explains it so you can read it with your eyes and comprehend it. Now, I'm going to turn on another moving average, and hopefully it works this time. If not, I'm going to jump to the lower time frame. Okay, I'm going to go ahead and jump to the weekly time frame. So right now I showed you that based on the month, whenever this went way up here, we were expecting a pullback, a retracement. Let me go to the week time frame. And there it is. It popped up. So there's my light blue line there. That is the TEMA 370. And these two lines, the 370 and the 280, are your major moving averages. Major moving averages. They provide a major level of support and resistance. Now I'm going to throw out some nuggets as we're going along. I hope that you have a pen and paper to take it down. A major nugget is this. You look for the direction that a pair is going in the longer time frames. The hour 4 chart, the 1 day chart, the 1 week chart, and the 1 month chart. Those are the time frames that you're looking to determine what direction the pair is going or potentially going to go. You will look at the lower time frames, and all of this is in my text document. Look at the lower time frames to determine the best entry or exit. You will tighten up your entry or exit, and you will have less drawdown whenever you look at the lower time frames for an entry. If you look at the week, you're not necessarily going to get in at the right time. It could go 100 or 200 points against you because you didn't look at the lower time frames to see there was quite a bit of movement. And I'm sorry that my voice is cracking. It is the Zoom, probably because of the bandwidth. Okay, so here you can kind of see whenever you see why does it stop in certain levels and why does it suspend in certain levels. Sorry, I'm dealing with a little bit of bronchitis, but you can learn how to trade based on the levels of support and resistance that moving averages provide, because they may not necessarily be at price support and price resistance. Hey, Sean B., you can go ahead and exit. There's no need to do that. I appreciate it. And what we're looking at, so I'm going to go ahead and turn on a couple of more moving averages. And this next one, the DEMA 100. And what I want you to see, it's going to be several lines on the chart. And you may say, well, this looks kind of crazy. I told you up front, you're not going to be able to understand it all at the first learning, but eventually you will get it. It will sink in. I have had students that sit there and learn from me. I do private mentorship where I help them, and the light bulb, boom, it goes off, and they're like, wow, I never saw it, but now I see how they work and what moving averages are important for what time frame. Okay, so if you start to look back in time, you can see where the price candles respect the moving averages at certain points. The more moving averages you put on the page, the more you will see how the price respects certain points where the candles hit. So right here, you can see how it squeezed in. It bounced off of the red line and up off of the purple, red line, purple line. Finally, boom, it broke down, came way down here and back up. This could have been a price level support. Let me go ahead and turn on another one. And this is the orange one, which is called the EMA 8, and it will follow closer to the candles. And then I will turn on one more, which is going to be the 5, and it is closer still. Now, when you are watching a pair trend in one direction or another, if it holds the orange and light blue line, you will understand that that is a strong trending move. When it jumps on top of the orange, so let me go ahead and enlarge this right here, and you will see when it gets on top. So it jumped over here, it traded on top of all of them, and then it hopped on top, and it came down, it tested the purple, then it got on top and ran all the way up here, traded sideways, did another pullback to the purple, jumped up, and it held the light blue line. That's when you knew to stay in the trade until it exhausted itself with a monster candle, and then one more candle way to the upside. It got way out of the range or out of the bounds, and so you would know that that is a time to exit and get into a reversal situation. Let me go ahead and turn on one more that is a major point, and that is your Bollinger Bands. your Bollinger Bands, and let me make sure I've got a color right here. I'm going to color it black. And that is the 20 right here in the middle, the 20 simple moving average right here in the middle. That is the Bollinger Band midline. You have your extended upper Bollinger Band. You have your lower Bollinger Band. The Bollingers are a measure of price action and volatility. So they tend to move big and small. They'll squeeze in or they'll expand based on the extreme volatility of the price movement. But when the candles run all the way up and touch the upper band, you know that it's almost time to get out or trade the reversal. That is not always the case, but the more you study and the more you watch these charts, the more you will understand when to get in and when to get out. I'm telling you, people all day long in my chat rooms are watching and they're learning and they're making money because they're saying, wow, I actually understand how the moving averages work. And you too, once you learn how to read them, it will click and you will have more profitable, consistent trading, less drawdown. You will have less whining and crying to people saying, I'm not making any money. Let me go ahead and put this out there because I also have a trading rules sheet. And I tell you, the number one reason why traders fail is over leveraging. You all do it because you're greedy. I do it because I'm greedy. But if you follow the strategies every single time, you will make money. I'm just telling you, you have to follow the strategies and the rules and execute them for every single trade. If you over leverage or you trade more than 2 pairs at a time, it is unnecessary. You only need to trade 1 pair at a time. If that pair is trading sideways and you're stuck in consolidation and another pair has news or something, sure, make sure that you have your stop loss and take profit in on the trade and then jump over and trade the other pair that has some good action. That's how you make money, when pairs are moving in one direction or another, not when they're trading sideways in consolidation. So it's okay, but do not get into 15 different positions on one pair. It is way too much. You're over leveraging. Friend, you need to follow the rules of proper risk management or you will blow your account every single time. Take it from me. I'm here to help. I'm here to give you what you need. And I'm telling you, Forex is not for whiners. You want to make money, you're going to have losses. It's just a part of the game. Football team, basketball team, baseball, they all have losses. But it's the one that endures till the end. It's a marathon, not a sprint. If you endure till the end, you're consistent, you will be successful. I'm telling you, I'm living proof of it. Now, I have seen many results. You can ask people in the chat room. You can come in and ask different people on Facebook that have seen, they've sat right here in this living room and they've watched me turn $4,000 into $64,000 in 8 hours. We have other leaders with IML that has watched me turn $3,000 into $50,000 in 8 hours. It is possible to do. Did I over leverage? Yes, but I know what I'm doing based on the moving average strategy. I've been doing it for a long time. It does work as long as you take your time and you know what you're doing. Did I have a loss here and there? Absolutely. Take losses, $2,000 or $3,000, $4,000 loss on a trade, but get right back up and keep going. And so I've done it time and time again. I can take $500 and turn it into $10,000 in a single day. I've already done it today for a friend of mine, and they're blown away. But results are not typical. You will learn and you will get there in due time. I'm telling you, it is possible. You can see by looking at this chart where the moving averages play a role, just by looking at them, seeing what moving averages has a more powerful impact or holds the price level. And 9 times out of 10, it will continue in the direction of the trend when it is holding those moving averages. You just have to start recognizing them by getting in, looking at charts, and going and back testing. What is back testing? Back testing is when you scroll back in time and you say, well, what happened here? And what happened there when the price did this? When it got under, okay, like right here. Let's look at this prime example. We're trending along, boom, and then we drop. And then we bounce back up and we hit here and then we went way up here on news. All right, you see that big red and then pushed way down. This is almost like a gravestone doji, a big long wick straight up in the air. You need to learn candle identification. You need to learn candle setups and patterns. You need to learn how the moving averages works and which indicators. I still suggest you look at some of the other web analyzer strategies like Davin's 4 rules with the stochastic and the MACD. Friend, they will help you. When you come and look at my strategy and you say, wow, that's just too much for me. It's okay. You're going to get it as you continue to learn. I'm here to teach you, and the light bulb will go off. But go and look at Davin's 4 rules strategy and say, let me cross-reference J-Rock's strategy with what he's saying and see if it is a good entry point. Now, what we see here, when it broke down, what did it do? It hit right here on that red line. That is your 280 WMA right here. So it crossed, hit that, and then it bounced up. So it respected this support level. The red line is a very powerful support level. Then it went way up here out of the bounds of your upper Bollinger. And I have my Bollinger Band set right here, if you see on my screen, to a standard deviation of 3. Most of them do a standard deviation of 2. What that means is if you do a standard deviation of 2, the Bollinger Bands will be much closer to the candles. 3, it widens it out more and gives you a cleaner look. So when the wick comes outside of that Bollinger, you can almost be assured with a 90% certainty that it's going to reverse or go the other way. Standard deviation of 3. Well, when it got outside, it came down, and then look what it did. Boom, it came all the way down that candle, and it set right on that red line again. That is the second test of that. The next day, it opened up, moved up, and then dropped, or came down and then dropped, and it closed there. The third day, pushed up a little bit, and then boom, it fell through. Then we dropped hard again. Well, what did we do? Once we got under that red line, that was old support, became new resistance over here. So that is your red line, your moving average. That is not a drawn horizontal price support line or resistance. It is a moving average that will show you where the levels are at. And then boom, it came down and it did it again. And then we fell off. Came down here, we found another level of support. If I were to draw a line across there, that would be a solid level of support. It bounced all the way up past them, hit that line, the purple, and then came down. Then finally, we had some news, but it held this Bollinger midline, which is your 20 moving average, came up, rested on it, and then sat here, and then news came out or something that sent it flying up in the air. The next day, or the next week, started with a huge gap up. And then we went up and sideways and continued in the trend. So this is back testing. When you go back and look in time and see what the moving averages will do to a pair. Now, I said that EC was going to come down, and based on the candles and the moving averages. So how far down? You can ask the people in the chat room today when we were watching the trending moves, and I would say, here's what I'm thinking it's going to do, and here's why I'm thinking it. It's based on moving averages where we are going to get in and get out. And I was almost spot on with every call. Not going to be that way every time, but I'm looking at moving averages. Let me go to the day chart. All right. So the day chart, it went all the way up here, came sideways, and then popped hard, and then it came down. The next day open, it bounced up a little bit, and that's where we were getting in on the confirmation right here, and then it fell straight down. Well, it found support right here on the day, the 10, which is the EMA 8 on this chart on the web analyzer, and that is your orange line. So it found support right there, and it is expected to bounce up probably to the blue line. Not guaranteed, but it could very well. So if I were to get my crosshair and I say, well, where is that blue line? It is going to be right there about 159.40. So we could bounce up into that level, and then the next day starts and we could drop on down. Or we could just come on down to this level, this moving average on the day chart, which is about, let me move this, 156.95, 157. So we could fall another 170 points from this point where we're at right now without even a bounce, because the strength is now to the downside. So you have to be protected if you're in a buy thinking it's going to bounce instead of a sell. You just have to be careful and make sure that you have your stop losses in place in case it does not go up, it comes back down. Normally people play the bounces, but that is what we're looking at based on the moving average, saying the potential for it to hold is pretty good to move back to the upside a little bit and then come down. Well, let's go to the 4-hour chart. Again, you're not going to get all of this in one session. It's going to take time, but I'm here to help. And as you can see on the chart, we have gone way up right here on the 4 hour. Actually, let me scroll in time. So we went way up here, then we broke down and we trended on top of the Bollinger Midline, which is your 20 period SMA, got under it a little bit, and then popped above it one last time. And then we broke down, boom, came all the way down to the purple, which is your DEMA 100, popped up a little bit, and then we fell through that. And here we are sitting on this point right here. We've got a little support right there at this next level on the day chart. I'm sorry, on the 4 hour chart at about 158.32. It could bounce up first, or it could come down and bounce up. We don't know yet. You just want to play the setup based on what it's looking like it's getting ready to do. Now, what I tell people is you've got to look across multiple time frames to see where the potential support or resistance levels are, and you have to see it could be a moving average on the 4 hour chart, or it could be a moving average on the 30-minute chart. Depends on the time frame. Some moving averages are more powerful on certain time frames, like the 5 and the 10 are powerful on the 4 hour and the 1 hour chart. That is the orange and the light blue line, the ones that are closer to the candles. Now, if you look right here, let me go back in time on this, and you will see when we trended on the 4 hour right here, we got under and we kissed or touched that purple line, which is the DEMA 100, hit the underside of it. It was resistance. It wasn't ready yet, came down. We bounced up into it and we trended along, squeezed in several hours of consolidation. Then we popped up. We broke above it, traded sideways, and we're off to the races. Sideways. Look at the moving averages that we're holding. We are holding the blue and the orange. So when we get up, that is a strong trending move. Well, this was a breakout candle, so you know it's going to go up for a while. Once that goes up for a while, here's what it does. It runs up, hits the Bollinger Band, then it'll trade sideways and hold the light blue line and go up again. The first pullback or retest is to the orange. So it runs up, then it trades sideways, pulls back to the orange, and then it runs up again. Then it'll trade back almost to the 20. That is your second retest, and then it'll run up again. Well, it was too strong, so it did not come all the way back to the 20. So that's where you want to be careful. Don't always expect it to come back. This point could have been another moving average on a different time frame. So you've got to look at multiple time frames and multiple moving averages. But I'm telling you, the more you do it, the more it will become clear, the more money will be put in your pocket on a consistent basis. Trust J-Rock on that. You can go and look and ask people that know about me that have been following me for over a year in these chat rooms, and they say J-Rock is right almost 90% of the time. He's on. Sometimes he gets in a little early, but he's almost spot on with his calls. Now, I do get in sometimes early because I see an opportunity. I think it's going to do this, and I don't look at another time frame to confirm it because I'm ready. I like to get after it. But I've scaled it back a little bit, and I'm looking for more opportunities to protect your account so that you don't blow your account, don't have drawdown, because I realize you don't have the number of dollars in your trading account, and so you can't handle a big drawdown because you're probably using 1.0 lot on a $500 account instead of a 0.01 lot. Stop over leveraging. All right, so it jumped up here and it traded sideways and it held the 5 and 10 again here, and then finally it started breaking down, and then finally when it got under, boom, it fell and dropped. Now let's go ahead and look at the 1 hour time frame. This is one of my time frames that I use. Yes, I am live. I do have a YouTube channel. It is Justin Money Phone or J-Rock Forex. Justin Money Phone, J-Rock Forex is my YouTube channel. Subscribe. You'll see when I put videos on there, and they're all to help you. I don't get paid to do any of this, at least not yet. I'm sure one day my ship will come in. But we are pushing forward, and the chat room is t.me Cryptos chat. So this is the 1 hour time frame. When it hit the peak here and it fell, then it traded sideways. So look, I'm going to open this up and move it over. So the 1 hour time frame is a very powerful time frame for you to note. When it dropped, it hit the peak and it fell, it tumbled through all the moving averages. The first pullback, as I said, is to the orange line. Look at your 1 hour chart and how it respected that orange line right there, the EMA 8. And then when it hit that orange line, boom, the bottom fell out again, and it came all the way to your blue, then dropped again. And people say, well, how'd you know it was going to do that? Moving averages. 9 times out of 10, they work for me across multiple time frames. The 30-minute, 1 hour, they're solid for that 5 and 10 move. And then it dropped again, and it trended sideways or up, consolidation for the whole night. And then it popped all the way up. Well, where did it go to? The next moving average. It went to the purple line, which is your DEMA 100. So when it popped up there and kissed that line, boop, right back down, and it tumbled again, and it tumbled all the way down. Well, when it broke down again, where did it pull to? It went all the way almost to the 10, the EMA 8, I'm sorry, and then it fell through again. And now look at where we're at. We are at the red line on the 1 hour chart, almost at the red line. That's why I'm saying it is a buy. I believe I'm in buys for this, about 30 lots, because I believe it's going to go, whoop, come all the way back up to this level, about 159.30. Why? Because here, these candles are sitting on it almost like a price support where they held 1, 2, 3. They all held that level right there. So that is a strong indication that that's probably where it'll go to. So when it does it, this Bollinger midline, which is your 20, will probably come down to about that level. By the time we get there, boom, it'll pop, hit that, and then we'll probably come back down. I doubt it'll come very far up to 160. It could, but you want to trade based on what it's doing. Go with the trend and anticipate based on the moving averages. The more you watch, the more you study, the more you're learning, the more you'll make. I'm telling you, just like doctors and lawyers go to school for years, if you study more and don't slack off, quit Netflix and chilling, quit watching TV, quit going hanging out at the bars, study. Study for 1 year and do this, and I'm telling you, you will set yourself free for the rest of your life, and you will stop having to work that 9 to 5. You'll start struggling to pay bills and being borrowing from everybody. You will be able to afford the finer things in life. You will be able to give and help people around the world. This is it. IML is it. I've never seen anything like this in 20 years. I've looked for a company that has people that will help each other and not expect anything in return. I'm sorry, I'm preaching right now, but that's just how strongly I feel about this, because I've been in this trading realm, and it is a cutthroat, dog eat dog, sharks in the water world. Everybody is out for themselves, and they don't care about you. They only want to do what they can do for themselves, and they're going to take your money if they can. There's so many crooks in this industry. I tell you what, I paid $30,000 for my professional education, and you're getting it for $175 a month. If you calculate that out, you need to have 17 years of paying IML $175 every month to catch up to what I paid for in one session. $30,000 is what I paid for my professional training education. And you're getting it for peanuts. And I'm telling you, you could make $30,000 in 3 months, no problem, in doing it on a conservative level, as long as you follow the rules and the strategies and you learn this moving average strategies. You put your head down and you go to work, friend. You're going to make money. I'm telling you, I'm living proof of it. Many people have seen it, and it is no joke. People say, well, I've seen so much crap out there and so many people selling programs. Yeah, I have too. But this is it. IML is it. God bless Chris Terry and ISIS and Alex Morton, Brandon Boyd, Stephen Hooley, all of these folks that are involved, Jason Brown. I'm telling you, this is a phenomenal company. I wish this would have been around. I wish I would have come up with this 20 years ago. Man, I tell you what, in the trading world, it's everybody who can do better than everybody else. I'm not going to share my secrets with you. If you want them, you got to learn, or you got to pay tens of thousands of dollars. Not here. You got monster traders teaching on IML TV. You got monster traders that are helping you in chat rooms, learning how to trade. They're mentoring. I'm telling you, this is it. Don't go anywhere. Stay tuned. The best is yet to come. I look forward to the Rise convention next week, the rise of the kingdom of God through IML, the transference of wealth from the wicked to the righteous. It's coming, and iMarkets Live is going to provide that through the most powerful financial market in the world, the Forex trading market. Everybody says $5.3 trillion a day. I don't believe that. You know why? That number's from 2013. We're in 2018, friend. I bet you this is a $10 trillion a day market. And it's probably going to get more and more because of iMarkets Live bringing so many people in. 1 million customers are coming in. I'm going to tap into that. I will travel to China to teach people how to do this. I will learn Chinese to teach people how to do this. That's how strongly I believe in the transference of wealth through this program and what is coming about by these products that they're offering, helping people change lives. Do you know that this product, IML, this company, can change entire countries' destinations, their situations? Because just think about it. Their cost, or we trade Forex, you understand the exchange rate of dollars. You got countries like Mexico 18-1. Well, if they get in and they start trading US dollars, friend, they could become wealthy by trading in US dollars and making bank and change their situation overnight. I'm telling you, this is on fire. And it's not only for you and me, it's for anybody else out there. I am blessed to be a part of this and to share this with anybody and everybody I can, because I know that I have the it factor. I know that I have something that is powerful and is going to change their life. And I'm so thankful to be a part of it. I'm so thankful to be entrusted by the leaders and by Stephen Hooley to be able to present this web analyzer. Man, powerful to give signals, to shoot out signals. And we look at it and say, oh man, that is great. I don't have to search through charts all day. I just go and look at a signal and I say, man, let me go ahead and look at that. That's a great, thank you for this web analyzer signal. I can jump on here and enter and make $2,000 in about 30 minutes. I'm telling you, this is it. I appreciate all of you. All right. Abdul, I see that, Abdul. I hope you come to Vegas and meet me, friend. Your life will change forever. Spirit of God will get on you and you'll change that attitude. All right. Ignore the haters and the critics. So let me go ahead and move down to one more time frame. Sometimes some people need to hear this. Sometimes people need to see what's going on. And this is my introduction to you. You want to know what I'm about? I just told you. All right. Broke down on the 30-minute time frame. So I'm just showing you what it looks like when you see the moving averages, when you get a larger scale, and to see how the price respects those moving averages lines. Well, as you see on the 30-minute time frame, when it sat above it, this was where the peak hit. Came way up here. It tried one more time to push up, and then it broke down, and bam, it fell all the way down. Well, anybody know what this is? On the 30-minute time frame, I can look at this and see a chart pattern instantly. This right here, left shoulder, head, right shoulder, and here's your neckline coming straight across. So when we broke down below that, boom, it tumbled. Now we're probably going to pick back up and retest. Old support is going to become new resistance. So here we are on the 30-minute time frame, this red line, and you see it retested, or it tested the support level right here before it bounced up and came all the way up here. Then when it broke down again, boom, it just fell. And look at what it did on the 30-minute time frame when you come closer. When it broke down through, it trended straight down, and it held the 5, hit the Bollinger Band, traded sideways all the way to the 10. The EMA 8, the orange line, boom, it fell down. Now here we are. So we're in a consolidation. It could drop. I believe it will pick back up because it's consolidating on a support level right here. We could drop, but we also could jump right back up here and retest. Old support is now new resistance. I said it would come to about 159.30, give or take. So that could be about right here where I said these two candles are sitting on, almost like a support level. So it could come to that level, 1.5930. And when we come through this moving average, could be right here at that time. So we are probably going to bounce up and hit it. Okay, let's go down to the lower time frames. I said you look at the lower time frames to determine your entry and exit. No, I'm not on IML TV. It is not my time yet, and I'm not worried about that, but I am helping any way I can, and any videos I can do or trainings. I do live sessions. I will put that in the IML web analyzer Telegram channel. I've already given messages out there, and I apologize for all the alerts that come through, because every time the web analyzer gives a signal, it shoots it over to the Telegram channel. That's why you constantly get alerts letting you know a new signal has come in. Stephen said he is working on it to be where it will go directly to your phone and let you know when you have an alert come through, so that the Telegram will be freed up a little bit for whenever I post a signal that I'm going to do based on what I see in the web analyzer signals. I can't do all of them because that's too much, but I'll do one or two that I think look the best and say, I think this signal has the best opportunity to make these folks the most amount of money in the shortest period of time. If it's scalping for 20 pips or 50 or 100. This EC call today was on fire because we captured over 100 pips in a few hours. Boom, straight down. Bop. Well, here was the news that hit, spiked it way up. We got into sells right here. Whoop, straight down. Well, if you look at where that's at, 160.50, and we're down here to 158, give or take. Let me move this box out of the way. Sorry about that. So 158.60. So that was almost 200 pips straight down. Boom. And we captured it from here, almost 100 pips coming down here. So that's pretty good. Pretty darn good. You guys are trying to catch 5, 10, 15 pips, and I'm looking for 50, 100, and 200 pips in just a few hours. I can show you how to capture 5, 10, or 30 pips, no problem. But if you want to capture the most, and here's what you're doing. Here's what many people are doing. You are letting your losses run and you're cutting your profits short. I'm going to say that again. You're letting your losses run and you're cutting your profits short. You're not going to win. You're not going to be successful with that kind of strategy. You need to learn to let your profits run and cut your losses short. How does that happen? Well, moving averages, you see where they are and you can look. I haven't even introduced to you the relative strength index. This is the RSI down here. Let me go ahead and throw my RSI in effect. And you can see down here, the RSI I put with a 14 period and the red line up here. Obviously, you should know what the RSI is. It is your relative strength index. It is instant. Now, on the lower time frames, it can give you quick reversals right as it hits the overbought territory and the oversold territory. So I put the red line on the 70, which means it's time to sell. I put the green line down here, which means it's time to buy. I have a video on YouTube, on my YouTube, Stephen has it on his as well, that shows you how to set up your moving averages and how to set up your J-Rock strategy. Everybody has to set up your own J-Rock strategy. So once you go and look at my YouTube video, then you will see how to set up these moving averages and how to set up your RSI and be able to read it with effectiveness. I also have the web analyzer training video that will help you understand how my moving averages work. So here's the 30-minute time frame. We came way in over sold territory and we're bouncing up, even though it's trending flat and sideways. It looks like it wants to fall off. It could very well. It's sitting on that support right there. Could very well drop into the abyss. And at the same time, boop, it could pop right up because we're way down here. Now, one of the things I also teach, this is another nugget, but I show you in that text document, this 50 level on the RSI, you see where I'm going to just, let me grab a line. I'm going to draw it. All right. So draw it about the 50 right here. Go straight across. All right, so your 50 level. Whenever a pair is downtrending, it will stay below the 50 RSI level and the 30. It will stay in between it with occasional drops into oversold territory. When you are uptrending, it will stay above the 50 and between the 70 up here with occasional pops above the 70. So that's when you know a pair is going to continue in a trend based on the RSI movement between the 50 and the lower level or the 50 and the upper level. That's just a golden nugget. That's also in my text document and in my video. But you can see what it looks like as you continue to go along, where the pair has been heading. Right now, we see it's been uptrending all up here, and here's almost like a rainbow arc, that red line and your blue line up here that's coming across, and it trended in between those before, boom, it finally broke down. So it no longer stayed on top of the moving averages. Once it gets down below the minor and major moving averages, it will start crash and burn. And here we hit right here, bounce way up, trended sideways, but still it's starting to weaken because it keeps testing that red line. So you know it'll give one final pop, maybe, and then crash and burn. And now you see how it tested here, came down, tried one more pop, but it came all the way up to the blue line, and then bam. So get in and out. Use your stop loss. Use your take profits. Don't get greedy. Make sure that you know exactly how to set up your trade before you get in and start trading, because you could lose your money if you do not use proper trading strategies. One more time frame. I'm going to go on down to the 5-minute, and I'm going to show you this last time frame, and then we are going to end this call, and I'll let you go and watch the video. And I get 100 messages a day, so I apologize in advance if you try to message me and I don't get back to you. I get emails, text messages, phone calls from around the world, and Telegram in between kids, family, and trying to teach people how to trade. I'm inundated, but stick around, continue to learn. If I don't answer, just hang tight. I'll try to get back to you. Okay, so the 5-minute time frame is a lower time frame that will help you tighten up your entry based on what it's doing on the moving averages. So here, like I said, we are testing that support level right here. It is trending and it is holding that support level. Could we break down? Yes, absolutely. I think we will pop up, but that's just the expectation that I have from seeing time and time again. So we may get one pop where you've got to watch out, because even in technical analysis, you've got to have the mind of the market maker, the mind of the sharks, the mind of the traders that have all the money. While you're sitting here looking at this chart pattern, say, oh, we're low basing triangle. Oh, it's a bear flag pattern. It's coming down. Its tendency, 90% is going to do this. And you're selling the crap out of it. And then what do? They take $25 billion and drop on the buy side, and boom, it explodes 100 pips in 30 seconds, and they clean your clock. It's called stop hunting. They know what they're doing. The big boys take the little boys' money. They are the bullies in the playground. They're going to take your money, your lunch money, and leave you crying, broke, and hungry. But if you know how to trade based on the strategies, it's not always going to work. You've got to get the mind of the market maker. Another thing that I'll tell you is that the patient trader wins. So if you're an impatient trader, you will always pay the patient trader. So if you are impatient trying to jump into trades, make something happen, I'm going to come along and take your money because I'm waiting patiently and I'm seeing a trend develop, and I'm not jumping in trying to make something happen. Oh, I got to be in the market. I got to be in a trade because I'm missing out. FOMO, fear of missing out. It's not always like that. It's going to be patience, waiting for that setup. And then when you time it right, boom, you jump in like a cobra strike, capture those profits, take down that beast, and you ride the big money to monster profits. Okay, guys, so that's the 5-minute time frame. That's what it looks like. And you can see the Bollinger Bands out here, your light green, RSI. I've tried to explain as much as I can with as little time. And love you haters. I don't know why those just stick out whenever I see the chat box, some of the stuff y'all say. Tell you what, if you want to prosper, you need to have a good attitude, and you need to bless people and stop cursing, especially when I'm putting myself out here. But I bless all of you that have learned a lot and that will continue to learn. I look forward to helping you to do what is right, to follow the strategies, to be the best you can be. Those that don't have a good attitude, friend, you're going to crash and burn every time, and I won't have pity for you. So hopefully you get on your knees and pray and ask God for forgiveness. Telegram channel, t.me/JRockForex, and you will find all my other links in there. Telegram, JRockForex. You'll find all my other links in there. I've got a Spanish channel that we need some Spanish people in there to help out, translate for me. We have a prayer call every morning that I do at 8 a.m. You can get in on that, where I bring a quick word or have invited guests on, and then I pray, get your day started out right, and bless the Lord and let him bless your profits as well. And look at ways to make money based on what he's telling you, because God can lead you and guide you in all things, and he can show you what to buy and sell, friend, if you have the right attitude. With that being said, I bless you all. Have a wonderful night. Thanks for tuning in. I hope that it's laid the foundation for you, set the stage, and that you will be on your way to making solid, consistent profits. And I do have people that are going to be helping me translate in Spanish as we go along. So y'all have a wonderful night. Thank you, guys.